What is going on, investors? Hopefully guys are doing well out there. That is right. It is Friday, and I have spent the last 15 plus years of my life being self-employed. And so when your first week is done as a full-time employee, Friday just has a special feel. So I might be extra pumped up for the FAANG Stock Recap Show today on the Investor Channel, where every Friday we recap all the major news and the technical chart patterns from all the major FAANG stocks and the S&P 500. This week we had some ski goggles released from Apple. We have Tesla soaring, but we better kick things off like we always do with Meta Platforms. Start of the week at 272. This one drifted down a little bit by about 2.7% to finish the week close to 265. Mark Zuckerberg obviously reacting to those AR VR headset that Apple released earlier in the week. We'll talk about that obviously a lot when we get to Apple's segments, but he is saying that his approach is certainly different than Apple Vision Pros. I would agree. They're two completely different products, and in a lot of cases, two completely different use cases. I would actually argue that Meta's AR VR headset is a far more niche audience. The fact that you need controllers, the fact that it covers your face, and most people that I've ever talked to with an AR VR Oculus headset basically say they have put it on once, never to really return to the product. Now, Meta previews a Twitter rival app to be launched via Instagram. I love this idea. I really think this is a good idea, and I actually really think this is going to be a significant product or a useful product on Instagram, likely to be called Threads. So maybe it's a new tab or a new way to access that on Instagram, but it'll be similar to Twitter, but it sounds like maybe just adding another use case to Instagram, which I actually think will be well worth it. Now, the company is announcing a channel feature on its WhatsApp for a broadcast service. I believe they already have groups inside of WhatsApp. This probably tightening that up a little bit. Moving on to Apple. Start of the week at 183, down 1.3%. Finished the week close to $181 per share. Apple unveiled $3,500 AR VR headset, which is not expected to be public until sometime next year. This thing looks absolutely freaking ridiculous. I kind of want to put it on. I kind of want to try it, but at the same time, $3,500 plus tax, which in a lot of places could be 7, 8, 9% on top of that. That's also the starting price. We're assuming there's probably higher end models that go up over even higher than that. The battery life wasn't impressive. My opinion on the AR VR headset, if you're interested in it, is this: number one, didn't feel like a finished product, still felt like a prototype. If it was a finished product, it would be shipping sometime later this year. Apple has actually done this a number of times. They've showed off a charger in the past. They've teased some other products that they actually don't ever come out and releasing. Now, this is very high profile, so I would expect this product to come to the market. But folks, we are talking about a $2.8 trillion market cap company. They are going to have to sell a boatload of these to actually move the needle when it comes to revenue. I don't think this is innovative. I don't think this is going to move the needle. We can timestamp this and come back in 5 or 6 years, and if people are sitting around with these ski goggles on their face, maybe I'll at that time admit I was wrong. But at $3,500, there is absolutely no way these sell in any significant quantities to move the needle on a multi-trillion dollar company. Now, the company is reportedly acquiring AR startup Mira as it pushes again into its new headset vision. My other thought on the AR VR headset is, if this is the best that Apple can do, Apple has spent billions of dollars. Those of you who have been following the channel for any length of time know that we cover Apple's earnings every single quarter, and we look at the R&D spend, and year over year, it constantly goes up by about $1 billion. Guys, if this is the best they can come up with after billions of dollars in R&D, if this is the best that they can come up with, probably not a good sign for tech innovation, at least coming from Apple. Moving on to Amazon. Start of the week at 124, drifted sideways to finish the week pretty much flat. Now, UBS sees further upside for Amazon shares, helped by its expansion of AI Bedrock server software. Now, AWS and Amazon's got some work to do when it comes to AI. Their cloud infrastructure primarily based on, we'll call maybe like the old web, where it's a lot of database, it's a lot of storage, it's a lot of running of applications. The new data center, if you will, is AI training and AI inference, if I'm saying that right. Essentially, the output of the AI, whether it's a chatbot or some kind of generative image or whatever. Now, Amazon's a little behind the curve when it comes to AI training, AI inference, but most people are assuming they'll be able to catch up. And then obviously traditional cloud when it comes to storage, server, database, those types of things. Amazon likely to remain a leader there. Now, Amazon reportedly eyes an ad tier for its video and partnerships with major channel inclusions. This is just the trend that we're seeing across the board when it comes to streaming video. Now, Affirm Holdings stock surged this week quite a bit, over 20%, in fact, in one day, as they added Amazon Pay, added its offering to its adaptive checkout. My guess, this is just a wild guess, wild speculation. I don't have anything that supports this, but I could see if Affirm, which is a stock that has been under pressure, obviously, since it's gone IPO. You got about a $5.5 billion market cap on this one. I could see at some point the market cap drains so much that Amazon could potentially acquire a company like that. Moving on to Netflix, start of the week at 402, one of the few stocks in the group that gained 4.2% to finish the week at $420 per share. Now, the company gained as a report shows that subscribers spiked after its password crackdown. The company had its 4 single largest days of subscriber growth in the United States in 4.5 years. And so there was a lot of password sharing going on at Netflix. Now, here's the interesting thing about Wall Street is Netflix telegraphed this at least 2 quarters ago that they were going to start to crack down on it. The stock had kind of the initial move higher, but there was maybe some mystery that customers would be disenfranchised and maybe cancel. Now, they are seeing a slightly elevated churn rates, but the amount of people signing up for Netflix is outpacing the people that are churning off. And that is sending Netflix shares even higher. Now, some things that could complicate the content strategy at Netflix is Hollywood actors authorize a potential strike following in the footsteps of the writers that are also, I believe, on strike. Now, so this is a serious problem if you're Disney, if you're Netflix, if you're any of these content providers that rely on these great actors and writers who it is probably beneficial for if there's a lengthy strike. Again, they don't have to go on strike for very long. There's obviously content in the pipeline. What it does is it delays content that would be in the pipeline maybe a year from now or a year and a half from now. You have any length of strike and it obviously starts pushing shows back and production back for a really long period of time. Google here on YouTube and content creators like myself, not in a union, might actually benefit. Moving on to NVIDIA, start of the week at $393, slid down about 1.5 points. Finished the week at about $387 per share. Billionaire investor Stan Druckenmiller expects to, quote, own NVIDIA for years, not months. Anytime one of these hedge fund guys say this, I don't believe a word that they're saying. They're just pumping this up. And when his 13F filing comes across, that's when you really see how he really feels about NVIDIA. Although I think he's held it and he's probably, well, not probably, he's done pretty well with it. Moving on to Google, start of the week at 125, slid down about 2.27%. Finished the week at $122 per share. Google is mulling attendance logs for its avocado toast and yoga studio attending staff as they're trying to lure people back to the offices in San Francisco. Other companies in San Francisco like Salesforce trying to do the same. Nobody wants to walk the streets of San Francisco these days, so I certainly don't blame Google and Salesforce employees for for wanting to stay at home. But it looks like Google is going to buck the trend and bring these workers back. I remember I would get a ton of comments on my videos a while back when I was saying that, like, this is going to happen again. And they're like, no, people are more productive at home. No, they are not. You get some short-term productivity gains, but in the long run, more productivity actually occurs in an office environment. Google's ChatGPT like AI tech to power Priceline's virtual travel agent. You are going to see these types of press releases every other day for the next, I would guess, 12 to 24 months. You're going to see a company integrate AI. Folks, this is going to be exactly like it was back in 1995, 1996, 1999, when companies would launch a website, would create a portal on a website, would launch a way to sign up and do online banking or trade stocks or whatever. Then it went to social media. Companies used to post everything on a blog and a website. Now they post everything actually to social media. Then came the iPhone, and you needed to redesign your website so it looked good on a mobile device. Maybe you needed to create a mobile app. We are in the new era of computing, and it is going to be an innovation era where you are going to see companies consistently redesign their tools and their interfaces to integrate AI. Now, moving on to Microsoft, start of the week at 336, down 2.7% to finish the week at 326. Now, Microsoft has a more than zero chance of closing its Activision deal. So you're saying there's a chance here. I think this was obvious for a while. Certainly, if you look at shares of Activision, they are not quite at a 52-week high, but they're approaching that. They essentially, the market is pricing in that something gets done here. The longer this goes on, regulators kind of have to do something. Now, moving on to the big winner of the week. Tesla started the week at $219 per share. Boom, up 11.5%. Broke out of that technical range that we talked about last week to finish the week at 244 and some change. Tesla ripping higher as analysts finally are highlighting its supercharger revenue potential. Talked about that every single time we've done Tesla earnings. We've talked a lot about their superchargers, the fact that they're growing them. I think the annual kind of run rate is about 30%. So they're doubling the number of chargers every, call it 2.5 years. I certainly have intimate knowledge as a Tesla owner. Look, all you have to do, folks, is take one road trip in an electric car, whether it's a Tesla or not a Tesla, to realize the importance of a vast supercharger network. Tesla is the freaking Michael Jordan of the supercharger business. That is why this week you had GM following Ford to join forces with Tesla to charge its cars there, because I guarantee you GM and Ford's customers, their number one complaint, if they go on a 300, 400, 500 mile road trip, their number one complaint is there is very little access to superchargers. Tesla's is by far, I mean, they are Michael Jordan, and there's nobody else even on the team or in the NBA compared to Tesla. And while we'll sit here maybe 2, 3, 4, 5 years from now, and we'll debate if Tesla's cars are better than Ford's or better than Mercedes or better than Audi, what we will likely not debate is the fact that Tesla is going to win the supercharger game. All the other companies, from ChargePoint to Blink to any other ones, they are not going to be able to compete. Tesla is going to be the winner there. Now, you might have big oil and traditional oil come in, but it's going to take a while to build that out. Now, Tesla rallies as Spain joins the Gigafactory target list. We'll see if Tesla has enough demand to continue to build out more of those Gigafactories. Now, speaking of demand, the company saw just 141% year-over-year growth in terms of its China-made cars. However, sequentially, quarter-over-quarter, you're starting to see demand flatten out, but it's not moving in the wrong direction. Moving over to the technical segment of the show, folks, the S&P 500, it has been in rally mode. Higher highs, higher lows. The trend is your friend until the bend at the end, and there's no sign of a bend, quite yet. Now, speaking of the trend is your friend, Meta soaring. We talked about how it was going to fill this gap. If I was in this trade, I'm not a greedy man. I would not have played it all the way through the gap. I'd have a trailing stop once it got up into the range it's at. Now, it did bend a little bit, but the trend is still not broken through. A break back down into like the 240 region would show you that Meta could potentially be breaking down. Apple pushing through all-time highs intraday, but I don't think we got a close there. Not sure the $3,500 ski goggles are enough to push this one higher. You get a push higher, there's likely to be an absence of sellers up here, so you could have some some really significant moves to the upside with Apple. Obviously, if you get that, you'll see a continuation of the S&P 500. A pullback in Apple is nothing really to be concerned about, because guys, the next series of lows technically probably all the way down here at 144. Really specifically, it's actually all the way down here at 124. I mean, if you have this gigantic pullback, but it stops short and then you have another rally higher, you just have this larger volatility of a swing. Right now, I mean, here's the deal though. Are you really excited about buying Apple at 52-week highs when they've spent billions of dollars on R&D and the best they could come out with were some ski goggles with 2-hour battery life? Probably not. Now, moving on to Amazon, looks like it's still got some legs in this rally. The rally has gotten steeper. Now, you should have some resistance with Amazon. Their higher end is at 145. I would assume you probably will meet some just down here at about 137 as well. Moving on to Netflix. This one also pushing higher. You got a gap here between 460 up to 5. That looks like where that one wants to go. Even if you get rejected at this range and pull back, you're still making a beautiful series of higher highs, higher lows. This is why it's so important, folks. You don't need to know spinning dojis and all the stupid names that people have for chart patterns. And look, if people want to do that, that's fine. Some people put moving averages and Bollinger Bands and all this stuff on their charts. I don't think you need it, guys. Higher highs, higher lows. This is a trend. If you get a break below trend, that is telling you something. And if you get like this parabolic move, which we'll see here in NVIDIA here in a moment, parabolic uptrend, that shows you something as well. Now, speaking of parabolic, NVIDIA has certainly gone parabolic. It's stalled out at this range. You certainly don't have an acceleration of sellers, but you also don't have that incremental buyer, as I think a lot of people on Wall Street not really interested in piling even more money into a stock like this. Would be a natural spot for a stock like this to take a breather and look for areas of pullback. Google also more recently pretty much has gone parabolic, but has found some pretty significant resistance here at 125. That makes sense because it was support during kind of the January to April range in 2022. Kind of goes without saying, but if momentum stays in Google, you're likely going to retest the highs like you were doing over at Apple and NVIDIA and Microsoft. So you still have upside as well. Pullbacks really aren't majorly alarming until they get really deep. Microsoft, beautiful V-shaped recovery, which if I would have had to bet on stocks going sideways, stocks drifting higher, drifting lower, or a V-shaped recovery would have been the last thing I picked. So trust me, I am as shocked as anybody else that is what we're seeing in a lot of these stocks. It has gone super parabolic. You're retesting highs up here at 340. Similar to Apple, you get a significant push up higher. And I don't know what the catalyst is. We don't have earnings for about a month and a half on Microsoft. Could we set up there and then, wait till earnings? That's possible. But, look, when you break through all-time highs on stocks, there tends to be an absence of sellers, and it tends to bring in kind of the retail crowd and the FOMO crowd, and you sometimes have what most people refer to as blow-off tops. Pullbacks in Microsoft don't really get scary until, we're talking like $80 off of the share price. It's incredible the moves these markets have made. Now, Tesla also, speaking of incredible, this is also why I try to keep the lines to a minimum here on the charts. Is once you broke above this technical downtrend, you didn't have to predict it carefully. In fact, you waited for confirmation, 1, 2, 3 candles above this, and the stock has just continued to rip. Should see some resistance up here at 270. That's another almost $30 higher. Even higher than that, there should be some resistance at 300. Although, if this looks like Microsoft, Google, Apple, Meta in the coming weeks and months ahead, yeah, you're probably retesting highs way up here. We're talking way up here, $390, $400. Is that possible with Tesla? Are we getting out in front of ourselves with these tech stocks? I'm going to have to let you answer that question, but we'll certainly discuss it more as we continue moving on here in these markets that have just absolutely ripped higher. Hopefully you guys have a wonderful week out there. The stock market is in a very, very interesting place, and I think it's one of the most exciting times ever to be an investor. Hopefully you guys have a wonderful weekend out there. We'll see you again next Friday. Until then, good luck with your investments.